The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Monday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading. Pretty calm markets to kick things off. We got a little bit of weak China data. Their economy not growing as fast as some had expected, but right now markets picking things up, basically flat territory. You have the S&Ps negative by 2 points, trading at 45.34. We make a recent high of 45.60 in the S&Ps just after 10 a.m. Eastern Time Friday morning, and from there it was lower prices by about 25 points throughout the day on Friday. But yeah, all things considered, I was taking a look at a weekly. Quite the acceleration off of the lows in October, man. And it's been a one-way trip from the March lows of about 38.50. You're talking about almost 700 points from that acceleration on the S&P. It's pretty remarkable. Jump to the NASDAQ 100. You talk about remarkable, man. From 11,000 to almost 16,000. That's a weekly. Back to a 15-minute chart. Friday, we make a high of 15,857. Right now, we're positive by 22 points for the NASDAQ 100. Only index basically in the positive. We get the Dow negative by 73 this morning. You have the Russell flat. You jump to commodities, crude. Quite the acceleration last week, up to $77. We've backed off a bit. A little bit of volatility at 5 a.m. 74.50, the price of crude, down about 90 pennies. You jump to gold, off about $13. Gold trading at $19.51. You jump to the 10-year right now. Positive by 3 ticks, pretty calm action in the 10-year. You jump over to the 30-year. 30-year positive by 3 ticks as well. We jump over to the dollar index. Dollar index, 99.96. 99.96, excuse me. You could call it 99.97, just under 100, as we have a little bit of dollar strength off of the lows of 5 a.m., but still under 100, man. You take a look at this thing on a daily basis, and something funky is going on with these bars on the DXY. Not sure why, because I'm pretty sure that's not how it happened in terms of an opening and closing print at the lows of the session. So not sure what's happening. I don't think that's how it went for some reason. Maybe it is. Is that what's going on? I think something funky is going on with the Thinkorswim charts in terms of those days, because it's not like, watch, just so if anybody's using a Thinkorswim, right, that would mean they have to open at basically the low of the day, trade higher, trade lower, and close at the low of the day each of the last 10 days. You just go back 10 days, and that's not what's happening. We just keep going lower every single day. So not sure why the daily's showing up there. Nonetheless, lower prices, man. 99.96 for the dollar index as we got negative markets to kick things off. S&P's off by 2. The VIX, 1386, man, at the lower echelons we've seen recently, just chopping around between about 13 and 14 with the lows. Pretty remarkable. You're talking about a month and a half. A month and a half we have had the VIX chopping around, basically building a base at around 14, chopping around those levels, making it low as 1273. All right, Monday trading, we're coming into, what are we out? We're 9 days out from a Fed meeting, basically. Pretty remarkable. As we come into a meeting, they're expected to hike. We got a couple articles talking about that today. Next meeting after that is September. They're already talking about cuts potentially in March. That's one of the articles that we'll touch on. Where do we kick things off? Let's kick it off with a little bit of China. They cut back on a one-year cash injection, even despite weak growth. You look at the number here, the People's Bank of China offered $14.4 billion of loans via the medium-term lending facility, 3 more than what was maturing. The size of the net injection, albeit the 8th in a row, was the lowest since November. Now, you take that, okay, and you're talking about weak Chinese data, and you have Yellen out there saying that China's economic slowdown risks cause ripple effects across the economy, although she doesn't expect a recession in the U.S. She's a member of the Biden administration, okay? She's Treasury Secretary. You got to be aware that it's going to be seldom in between that you're going to have a member of an administration, especially running for re-election, out there forecasting a deep recession or something to that degree, right? So you have to take that for what it's worth, whether you respect her, agree with her, and whatnot, okay? Everything gets political, but boy, it's important to remember that, all right? Many countries do depend on strong Chinese growth to promote growth in their own economies, particularly countries in Asia, and slow growth in China can have some negative spillovers for the United States. So I would pay attention to that one. As China keeps coming back a little bit weak, you look at the loans they're injecting, and I believe we just had their quarterly GDP come in at 0.8%, which is not what they were looking for on that number. We'll pull that data up as well, but market's a little bit skittish on that data. We'll see where we go. That's a little bit of big picture. Jumping around to which rate. Here we go. So PIMCO's Clarida says market bets on U.S. March rate cut make sense. Can you imagine if we start getting, what's the economy? What's going to be happening if we got cuts coming down the line in March, man? You know, we got a long way to go to be at 2% to have cuts. There is a very reasonable case for staying where we are. But if you start cutting, I mean, think about it, right? What is the mandate for the Federal Reserve? It's important to remember this, because if this is going to go that fast, if people making bets that it's going to happen in March, and it does happen in March, you're going to see a rapid deceleration in inflation, jobs, and growth, okay? Because their two mandates are full employment, we're at 3.6%, and price stability. If they start erring on the side of having to cut, it's going to be a rapid transformation. And you have some serious players out here talking about that's a reasonable time when you talk about March. Now, we're in July right now. As I mentioned, we got a Fed meeting in 9 days. The next one is in September. Absolutely remarkable if 6 months after September we're going to be cutting. But that's what is happening. Vice Chairman Clarida said market wagers on U.S. interest rate cuts in March are understandable given a scenario where there's a softish landing and the central bank is confident it's reined in inflation. Tough for me to imagine a period of 6 months where you're that confident, depending on how many times we've had things pop back up, flare back up. At the same time, Clarida said that economic dynamics may change. We know that's the case, of course, okay? It's going to be interesting, man. 6 months we're talking about from the September meeting to March. Treasury yields are likely to move in the 3.25 to 4.25 range this year, Clarida said. We're sitting at about 3.83. Quite a range he gives himself in terms of a full percentage of 3.25 to 4.25. 10-year yields are going to be driven by both the underlying dynamics and inflation. And we're going to talk a little bit more. Why not? We'll jump to it right now. I'm jumping through a bunch I had pulled up, but why not? Because this article from Bloomberg talks about history says it's time to buy long-term bonds as peak rates near. Investors warm to the view that the Fed's on the brink of the final hike. I can more easily understand if they stay where they are and this is the last hike, then I actually can understand if they're going to begin cutting in March. Maybe that's how fast things come down. 6 months of the status quo. Maybe they don't think they have to be this high, right? Maybe they say we can do one cut because we can always raise again. But boy, if you ever have to cut and then have to raise again, that's not what Chairman Powell wants to be written in his history books, man. So we'll come back. We'll talk a little bit about this as well, because guess what? Long dated is where you want to be. We'll look at some of the returns. And yeah, long dated on the heels of that last cut. You're talking about big numbers, man, on a percentage basis. Stay tuned, folks. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got markets pretty much where we pick things off with the S&P slightly in the red right now. Pick things up, I should say. NASDAQ 100 barely in the positive. You get the Dow off 72 points. Let's jump to those notes, man. So we jump over to the 10-year right now. You're looking at a 10-year, positive by 2 ticks, a little bit of volatility. We're looking at a 10-year yield of 3.81% right now. Okay, 3.81. It's been quite an acceleration from where we were after the ADP print. When you were at 110.15, we're at 112.28. What were we at on the 10-year? Something above 410 almost on the 10-year. Now, what this article talks about, jumping back, is this is talking about, and nobody knows, of course, as it says here, because it's hindsight, when the actual last hike will occur, right? History says it's time to buy long-term bonds as peak rates near. Well, you got to figure out, first of all, when the last hike is. Okay? Investors warm to the view that the Fed's on the brink of the final hike. Surveys find historically high demand for interest rate risk. Not a bad risk reward getting into the yield curve where you are right now, right? Especially if you plan on holding the money, you can't go wrong because you're guaranteed the X interest rate that you're getting. Of course, you're approaching 4% on a 10-year. You start doing CDs, man, and I'm jumping around, but I've talked about it continually. You can push out a 5-year ladder right now at about 4.7, 4.8%. You're almost locking in a 5% yield for 5 straight years. What do you do after those 5 years, though, right? Are you rolling it potentially on a ladder? Nonetheless, treasuries maturing in 10 or more years have consistently outperformed shorter-dated sectors immediately following the last in a series of interest rate increases by the Federal Reserve. It's common sense if you understand it. Of course it makes sense that by locking in peak rates for a long duration, when those rates start to turn negative and short-term goes much shorter, the Fed begins no longer hiking and now they're cutting. You have 2 years decreasing rapidly. Money markets are decreasing with the Fed cuts, etc. The longer out duration you go, the greater impact that pullback in rates will have, right? So as they mentioned, though, only in hindsight is it known whether a rate increase is the last one. There's a lot of speculation out there right now, though, okay? Investors have embraced the view that an expected quarter-point hike in the target range coming July 26, next Wednesday, will conclude the epic series that began in March of 2022. Year and a half, man. We've been used to a market that is in a Fed hiking cycle for a year and a half. So, yeah, it's probably coming to an end. Now, we're going to talk a little bit of inflation on the next go-around here, though, to show you why it might not exactly be over. Okay, so is this the last hike? Okay, you might lock yourself to a 10-year duration, and if they have to keep hiking, well, guess what's going to happen? That might be a problem, okay, in terms of when you're getting in and in terms of those yields, the capital appreciation part of that, okay? Now, they have analysts here talking about we like the idea of extending and adding duration at this point in the cycle, okay? Bonds this week logged their biggest gains since March, and this is dated Saturday, okay? So it's talking about this past week, when the failure of several regional banks unleashed haven demand, okay? And that was the spike that I walked you through here. This huge acceleration, man, that is quite a return for people who were in the 10-year over a 5-day basis, right? You bought it at 110. Why, you sell it for 112. That's a 2-point gain on a 110-point index, essentially, when basically you're just trying to lock in a 4% yield for 10 years, right? And what'd you just make? Almost 2% in a week. Okay. In bonds, the biggest moves in yield were in short and intermediate maturity tenors where expectations of Fed policy are expressed, okay? The 5-year tumbled 35 basis points compared with just 13 basis points for the 30-year. But long-dated bonds, and I'm getting to this chart, which is the numbers which matter, but walking you through the setup here, but long-dated bonds, greater price sensitivity to a given change in yield means investors can reap bigger rewards. So when you're looking for that shift, okay, if you're buying fixed income, when you're talking about buying fixed income and looking for a return for price appreciation, right, versus just the yield that you're getting on a longer term basis when you're buying these in an ETF or something like that, et cetera, on average, treasuries maturing in 10 or more years have gained 10% in the 6 months after a Fed policy rate peak. Imagine that, right? That's just a 6-month return. 10% on a 6-month basis, compared with 6.5% for bonds maturing between 5 and 7 years, and 3.7% for those due within 3 years, according to data compiled by Bloomberg. In 12 months, the longest dated bonds returned 13%, outpacing the other sectors. And here's where they look at it, okay? And what this is talking about is, in black, you have the return over a 3-month period, okay, after the Fed's hiking ended. You're talking about a return over 6 months in the pink and a return of 12 months in the yellow. And yeah, they all returned pretty decently, because what did you do? You bought fixed income right at the high as rates are going to decrease. So what is it? It's higher price and lower yield, right? So what's going to happen? You're buying those, the price is going to appreciate, the yield is going to go down, the price appreciation is going to give you the yield. I think it's important to know that if you're playing that game, man, and you're looking for the price appreciation, or you're looking to lock in some fixed income with potential returns, if we're going to get the shift you imagine, boy, you peg this thing. Historically, it's going to tell you that if you're long-term fixed income and you peg the last hike, yeah, you're going to return nicely 7, 10, 12% on a yearly basis. That's over the next 12 months. Anywhere on that curve, though, you peg that, you're pushing 7% if you're in short-term fixed income. You're pushing almost 10% if you're in 5 to 7 year, and you're pushing 12% if you're in long-term. So, of course, you're going to get paid anytime that you choose the end of that hiking cycle. But I thought it was interesting nonetheless. All right, so you jump from that story, was over at Bloomberg, okay? What did I just have up here? I just had... Is that what I was talking about? No, that's a different one. All right, we were talking about CPIs. Yeah, let me jump around. Well, this is part of it, okay? So pay raises are finally beating inflation after 2 years of falling behind. Actually, no, excuse me. This was the article I wanted to jump to because we're going to talk a little bit of inflation. Wages rise more than 4% while consumer prices increase 3%. Now, this headline struck me, okay? Yeah, CPI on a headline basis, man, is up 3%. Energy is down, let me get the number right here. Pretty sure it's like 16% in the last CPI. 16.7%, okay? This is the Bureau of Labor Statistics.gov website. This is the publishing of the CPI that we just got. July 12th, last Wednesday, okay? It points to all items index increased 3% for 12 months. The core, take out energy, is 4.8. What's important to note here is when you go to the table, okay, you go to energy, unadjusted 12 months, ended in June of 2023, you're talking about energy decreasing almost 17%. So in touting that wages are growing more than expenses, right, because wages are growing at 4%, the CPI is growing at 3%, what you're factoring in there is, as we go to the break, but it's an important one, man. We'll talk about it because energy could be the wild card here. And you're talking about an energy price that's getting helped by the fact that we were pushing 120 last June. We were pushing 70 this June. And still, when you add that in, CPI is at 3%. What happens if we don't get that help over the next year? That's going to matter. We'll talk about this when we get back. Come back for the open, folks.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open, and you catch a little bit of a bid on the opening bell as you got the S&Ps right now up by 5 points, trading at 45.42. NASDAQ 100 up by 59. The Dow we're negative by about 70. We're just negative by 10 points right now. The Russell negative by 1. Let's jump over to some of the FANG stocks. Apple shares up about 0.9%. Look at this thing, man. Remarkable. NASDAQ 100 on a tear as usual. Microsoft shares up about 0.4% right now. We jump over to Google shares up about 0.4%. Tesla shares up 2.28% right now. Did we get Tesla? Yeah, we got Tesla earnings on Wednesday, man. $19 move they're pricing in right now on a $28 stock in either direction. Not that bad. Not that bad when you look at, it's up $7 right now in the open, right? And you're looking at, if you want action through Friday, you got an implied move of about $24 in either direction. If you just want action through Wednesday, that's about a $19 move in either direction. Tesla shares up 2.5% as we got the markets picking up some steam to the upside right now with the Dow rolling over positive on the futures. Let's jump over to Meta shares. Got to check out the Magnificent Seven, man. Meta shares down 0.6% right now. You jump over to NVIDIA, up 1.6%. Yeah, my dad was talking about it on his show Friday, man. How about NVIDIA? $30 from the highs of Friday to the lows of Friday. To give you some context here, so NVIDIA, they are with their numbers in August, but look at the volatility that is priced into this equity. You want action through Friday, okay? You're talking about $23 of movement in either direction for NVIDIA shares. It's a wild market, man, but it makes sense when you get, $15 up and $30 down on Friday, let alone you go back to where we were on Thursday. You were trading at 445 up to 480, all the way back to 450. So volatility, man, as this market tries to figure it out. Okay, going back to the conversation we were having about CPI, about energy, because it's important when you see all these things come up, right? First, let's jump to the article that gave me kind of the heads up here, right? And you're going to see this stuff all over the place, and it's important in your own brain, I think, to think about the context if you're trying to formulate what's going to happen going forward, and you don't have to figure that out, okay? But I like to try and figure that out. Wages rise more than 4% while consumer prices increase 3%. Right away, I said, okay, that's great, but I feel like wages have some catch up to do, okay? They can't really catch up that fast if there's pressure on the economy because people aren't going to be handing out raises. That's the whole point, right? Unemployment rises. You got people out of work. People who have jobs to offer don't have to offer as much to hire those people who are a little bit more desperate on the unemployment rolls. It's a sad truth of how it works when you push people off of jobs to tighten the economy a bit. Now, what's important here is when they put this number up on a headline basis on the CPI, right? I wish they used core because, or I wish they put both on there, to be fair, right? Because energy is just such a component of why we were so high a year ago and what has happened since that time. Now, to give you a glimpse, okay? Yeah, this is what you're looking at, okay? Now, this is Pew Research, this is 2022, but it's looking at what goes in the CPI, okay? Relative importance of different expenditure categories. Shelter, huge in the CPI. And the reason why it's so huge, folks, is because this is the consumer price index, and consumers overall spend about a third of their wealth on rent, shelter, mortgage, whatever it be, right? That's the standard time. If you're out there and you're going for a rental or you want to have a renter in your place, you want them to make 3 times at least the monthly payment so that they're not spending more than a third of their income. So shelter is about 32%. Food is 14%. Remember that one. That's a big part of the CPI because that's actually going up at almost 6%, okay? Energy is more than 7.5% of the entire CPI. Now, energy, boy, we have been helped out tremendously, right, over the last year when you take a look at crude prices. I just talked about the energy component in the last CPI. You're at a level of, what did I say, 16, 17% energy increase. What happens if we get a cut to rates? It's almost like, housing prices have held up so well as mortgage rates have gotten pressed to 8%, 7 to 8%. Going to be interesting to see what happens, man, as rates start to come back down. The purchasing power of Americans consumers. If we get this soft landing and we start getting cuts in March, and you see even more pressure to the upside for housing. We're only 6 months away, and then we're going to be coming into comps, folks, for the crude oil that are between $70 and $80. And if you catch a lift to 90 or 100, yeah, then you're going to have a higher print on CPI for the energy component at least. Now, this was the last numbers we had, okay? Again, looking at the numbers, this is the CPI that we just got last Wednesday, okay? All items came in at 3%. That's the headline. That was the smallest 12-month increase since the period ending March of 2021. If you take out food and energy, you're at 4.8. That's the core. Energy was down 16.7% from a year ago. That is 7.5% of the headline 3%. That's not happening again anytime soon, man. That's running out. And the important part to the last part of this, the food was up 5.7% over the last year, okay? Food was up 5.7% over the last year. So you got food at 14%. That's pushing almost a 6% rise. You have shelter that's held up extremely well. And I would say you could even get some lag there in terms of rents still going up. And then you have the fact that if they're going to start cutting in March, that's going to put a lift in those numbers. It's very difficult, man, when you look at the energy component of that 3%. I would stay focused on the 4.8% number more so. Yeah, as you go forward. In terms of the impact, you got to keep your eye on crude, man. I mean, how about the trade if you were selling volatility in crude? Basically, over the last 8 months, you could have been selling volatility, man, and you've been trapped between $70 and $80 over that time. You're building cause for something, man, you know, and are you building cause for a run back to $40, $20? Well, China's slowdown is going to help that argument for sure. You got crude down $1 right now, down 1.5%, 1.25%, I should say, 74.47. But relatively speaking, if the economy handles things well, we have the soft landing. We've been chopping around at 70 or 80. Going to be interesting to see where crude goes because $74 is not that bad relative basis. And yeah, jumping back to the dollar, my dad's in there in the Tiger's Den talking about that DXY. Yeah, back above 100. A little bit of an acceleration, man. 114 right now in the dollar index. We jump over the euro. Euro US dollar. We were as high as 112.48. You're backing off a bit to 112.12. Still, this thing has been on quite a tear, right? Look at that run. From when the ADP print came out to when we got the non-farm payrolls the next day and everything potentially eased as non-farm payrolls nowhere near what ADP was, you're talking about a euro from 108 to 112.4. Mammoth moves over that period of time. All right, let's jump around to some of those FANG stocks as we got the NASDAQ 100 up 80. Apple up 1.4%, man. We're nearing all-time highs for Apple. Are they over the They are. They're over the $3 trillion mark again. $3.04 trillion for Apple, 193.34. Just remarkable, man. Up 1.4%. Microsoft up 1/3% right now. You jump over to Google shares up 1.2%. Stay tuned, folks. Come back over some other equities with their numbers this week. Stay tuned. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand,
as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We get the S&Ps up by about 4 points right now. NASDAQ 100 up by about 70, 15,765. You get the Dow in negative territory by 25. You get the Russell up by 2. Yeah, so we get Bank of America is out with their numbers this week. They're out with their numbers tomorrow? Yeah, out with their numbers tomorrow. About a dollar move for a $29.30 stock. You got Goldman Sachs out with their numbers tomorrow as well, looking at about a $10 move priced in either direction for a $325 stock for Goldman Sachs. Morgan Stanley tomorrow. So, we got Bank of America. Let's do it again. Yeah, Bank of America and Morgan Stanley tomorrow, the 18th. Okay, and then you get Goldman Sachs on Wednesday. We also on Wednesday, I mentioned Tesla. They'll be out with their numbers on Wednesday, about a $20 move for a $291 equity, and Netflix is the other one out Wednesday as well. $37.50 priced in. Now you look at about a $40 move priced in for the week. You're almost talking about 10%. For Netflix, we're pushing recent highs, man. Today we're up 2.9%. Quite the acceleration for Netflix. Yeah, $9. Look at that pop, man. Ahead of their numbers. They're buying ahead of those numbers. Going to be interesting to see how the Hollywood strike, the writer's strike, the actor's strike, how that all plays into winners and losers in terms of Netflix, in terms of Disney. You had Iger out there last week talking about Disney potentially selling off some of their assets. Quite a divergence here with Disney trading lower off 1.5%. 1.5%. They're going to be out with their numbers in August for Disney, 87.35 as you get Netflix soaring, man. Look at that run Netflix is on, man. Talking about just over the 50% of its entire give back from 701 to 162, almost tripling in price over the last year. Think of that, right? Remarkable. Okay, so the two big honchos this week, right, are Netflix and Tesla, but we have a couple others, man. I'm just going to check through some of the other equities out there. I talked about Bank of America on Tuesday. We got some of the regional banks out there. Bank of New York Mellon, they'll be out with their numbers on Tuesday as well. Going to be interesting to see these regional banks, right? Ahead of those numbers, you're up by 1.5% right now. We get Interactive Brokers on Tuesday. I mentioned Morgan Stanley on Tuesday as well. PNC will be out with their numbers on Tuesday. Basically flat this morning on those numbers. Western Alliance Bancorp, one of the ones that had been in quite the hysteria. We take a look at this thing longer term, man. Just chopping around, right? About $40. You look at volatility, man. A couple dives to about $10 when things looked a little dreary. That was following their last earnings, right? So you got Western Alliance Bancorp coming out with their numbers on Tuesday. I mentioned we have Netflix and Tesla on Wednesday. Some of the others that we're getting on Wednesday, Alcoa. They'll be out with their numbers on Wednesday. Ally Financial is one that will be out. Citizens Financial Group, they'll be out with their numbers on Wednesday. Equifax, Goldman Sachs is on Wednesday. We talked about Las Vegas Sands, LVS. We'll talk a little bit of World Series of Poker later. They got 3 people left in that tournament, man. They're going to be playing down tomorrow. For all the hoopla, 3 people left in that tournament. In third place, already guaranteed $4 million. Las Vegas Sands, more of a Macau play almost at this point. $60 though, down 2.5%. They're out with their numbers on Wednesday. What else we got? U.S. Bancorp on Wednesday. United Airlines. We get some airlines too. Yeah, we got United. They'll be out with their numbers on Wednesday. You can see we're coming into some big earnings, man. United up 1.1% right now. We get American Airlines on Thursday, up 1.1% right now. You get a lot of banks as well. Blackstone's in there. Let's see, Blackstone, BX, yeah. Look at this run, man. Up 1.3%, helped out last week by the market and some of the other banks. CSX, Fifth Third. This is all Thursday we're talking about here. Johnson & Johnson, KeyCorp, Newmont Gold. We get them on NEM. Down about 0.3%. Travelers, Truist, and American Express, the big one on Friday. Checking this out. American Express trading at about 174.39, up about 0.5%. American Express, you're looking at about a $5.40 move priced into their numbers on Friday. Other companies out on Friday. AutoNation. Let's jump in. AN. Look at that chart, man. Right? From 130 to 180, we've backed off a bit. Quite a run. And we jump over to Carvana. Why not? Carvana, quite a run. From $3 and change, and really, though, from what, $7 in May to $37 today. Down 1% for Carvana. And one of the articles I had pulled up here, let's take a look. Yeah. For clues about Carvana's future, look to its past. They're hot, but business sags and investors worry about the family's plan. I'd be careful on this one, man. You know, you want to gamble, you want to put some risk equity in play, go for it. But you see the highs and the lows with this company, and the creditors are watching closely, as they say. They've signed a pact to cooperate against the family, right? Wary of company efforts to remove assets from Carvana. Did you hear that? That's the biggest part I wanted to talk about on this article. You do not want to be buying equities, folks, where the creditors are coming together to make sure they're going to cooperate against the family that runs the business, wary of company efforts to remove assets from Carvana. They've hired private investigators to tally up the Garcias' wealth. According to people familiar, a debt restructuring proposal from the company went nowhere. So be careful, man. You know, where there's risk, there can be return sometimes. The greatest risk sometimes gets the greatest rewards, as we see. But yeah, I would be careful. Some of the cherry picked, you know, this is a decent article. I'm not going to go through it all. I'll post this in the den, okay, because this is a cool one. Bondholders are skeptical. Much of Carvana's nearly $6 billion in bonds trade below 70 cents on the dollar. Investors have several suits against Carvana, alleging the Garcias have run the company to benefit themselves over shareholders. Yeah, so that's a tough one for Carvana. They've been helped out immensely by some of their numbers. But boy, when you hear those types of deals, right, you don't really want to worry that you have the founders, and I'm posting that in the den. If you haven't joined the den, folks, check it out. You don't want to worry about the founders pillaging the company. Not that they're pillaging it, right? They built it, but you see what's going on there, to say the least. All right, what else do we got pulled up here? Let's take a look. We talked about CPI. We talked about energy. We talked about Carvana. Ford. Yeah, how about Ford? They cut the prices on their electric 150 Lightning pickups by as much as $10,000. Be pretty cool if we get into a price war. You can see how it would take place, man. They're off 4.1%. I say it'd be pretty cool as a consumer. Because you see a price war, right? Tesla's already started it, man. You're seeing it with Ford now. Ford off 4.1% right now. They knocked 10 grand off. The cheapest version is going to start at about 50,000. It's amazing when you talk about percentages, right? Of after-tax income, a $10,000 cut. This isn't going from 100 to 90. This is going from $60,000 to $50,000. All of them, all versions, are going to get at least a $6,000 cut as Ford works to boost production this fall. And yeah, the race is on, man. Tesla has to publish all their prices, so they're going to be the first one out there. Yeah, I'd say 50K is a sweet spot across the board, right? Nowadays, you get a nice new, brand new car for 50 grand, man. That's probably making out like a bandit, you know? And you're seeing that these companies are going to be forced to compete, and the consumers might be able to benefit a bit as the battle's on for those prices, man. Yeah, it's it's got to be tough if you just bought one of those things for 60 grand, right? Last month, just like it's got to be tough if you bought a Tesla for X amount of dollars right before they started cutting in the same way. But nonetheless, the battle for EVs is on, and you're seeing the prices play out. Markets were green across the board. S&Ps give up a bit. We're up by 3 right now. You jump to the dollar index. Back above 100, 100.07. Stay tuned, folks. One more segment. I'll be right back. Don't go away.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got a chart of Marriott International up here. You see the bid up about 1.3% on the open to 191.81. You take a look at this thing a little bit longer term. That's back a year. We back it up for the 5-year. You're just near those highs we had about a year ago. I guess April of last year. 195 was the spike high. But boy, it's been a lot of higher highs and higher lows from the COVID lows of $46, pushing almost 200. So your upper percent from Marriott, I bring them up because the news out that Marriott aims for Las Vegas Strip with MGM Resorts Loyalty Pack. So Marriott Bonvoy members can use points to stay at the Bellagio and other MGM properties in a deal that boosts Marriott's global room count by 2.4%. I imagine that's a hefty boost, man, considering the rooms they probably have. And yeah, you're talking about MGM Resorts International. They're launching MGM Collection with Marriott Bonvoy. So all you Marriott points people out there, you can now use them for a beautiful stay in Las Vegas. 40,000 rooms is what they're going to add. Pretty remarkable. Las Vegas properties at the Fontainebleau, a long-stalled development. MGM's Cosmopolitan of Las Vegas is already a part. So interesting nonetheless, right? Another way to spend your points. Why not, man? Get out to Vegas. And in the light of Vegas, there's your three gentlemen playing down for the World Series of Poker main event champion. Getting their names. Stephen Jones, he's leading the way with 238 million chips. That's 119 big blinds. They're coming back with the big blind of 2 million chips. So it's going to be 1 million, 2 million. Daniel Weinman, he's got 100 right on the dot at 199 million chips, 165 for third place. They've all locked up at least $4 million. And there's your final table payouts right there, with fourth place getting knocked out, Jan-Peter Jachman. All the three left, all from America. 3 Americans competing at the top. $4 million for third, 6.5 for second, and 12.1 up top. And they'll play that out tomorrow at some point, as they played late last night. All right, folks, thanks so much for starting your trading day, starting your trading week. Stay tuned. We got a man, Basil Chapman. He is remote, but he is in there. He's been getting set up for his remote broadcast live, folks. He's coming up right now. He's coming up next. Have a great Monday, folks. Stay tuned for Basil live program, and after that, and we'll see you tomorrow. Have a great one, folks.